guys, it is Ronnie. It's Monday, July 27th, just after the market close, and I'm going to give you an update on Friday's action in the market as well as today's. Uh, my last video was on Thursday, and I took some actions on Friday as we spoke about in Thursday's video. So we'll recap those actions on any trades, and then also talk about earnings week. This is a pretty heavy earnings week this week, which could move the market. So I'm kind of sitting on my hands, trying not to make too many trades this week in the broader markets, just because of earnings. So I've gotten out of a lot of the broader market trades, as well as some of the puts that I had on the tech stocks going into the weekend, and looking to see how they act on earnings, and of course, post earnings, if there's any trades to be had, we can discuss those as they come up. So first, we'll go over kind of the broader view of the indexes and the action that's occurred since Thursday, starting with the S&P 500. So on the screen on your right, there is a weekly chart of the S&P 500. And what we've been kind of watching is this breakout still. So on Thursday, this hammer pattern was kind of where we were, right? We had this hammer pattern from the prior week, and this little topping tail right here was still green on Thursday. So what we were looking for on Friday is for it to turn, red, of course, and end the week underneath this trend line. This price level, which is the prior high on this big red bar here, the prior high on June 8th of 32.33. So it did in fact close the week out below that level. And so to me that was great. It was good that it closed weak, which definitely gave merit to the thesis that it could potentially have some lower price action coming. But on Friday, if you look at how choppy it was on Friday, this is Friday's intraday chart here on the left. So you can see how choppy the action was on Friday. And if you go to the daily chart, you can even see this better. So this is Friday's chart right here. This actually what looks like a little bit of a doji, which just marks, which is a candlestick pattern, which kind of marks indecision, or just very, very choppy action in the market. There's no real agreement on where the price is going or could go. So that could potentially, set up for the next day being the opposite direction of that doji, right? So you can see the tail's kind of a little bit longer on the bottom here. So it could have, made for higher highs today, which it did. You can see today's chart has closed, today's daily chart has closed right at this trend line that we were talking about before. It's kind of a shorter term trend line from back here in May, the low in May, and it hasn't just been perfect or anything, but it's from that May point to the very first next low right here in the higher low on June 15th. Now it crossed below that once, hit the 200 moving average, bounced, came back down, just pierced it a couple of times, bounced, now it's come back down, and it's just right underneath at the underside of that line. So tomorrow and the next few days, earnings will be really key in kind of seeing where this market goes overall. And so what we're looking at is, for it to continue to stay below this trend line, or even just below this gap on the weekly chart, which is 32.59, which it did get above last week, but it looks like that breakout failed. So the break into the gap, if you take a look at the weekly chart, this gap that we're talking about here that's highlighted, this oval, this is a gap that it pierced into and actually failed and closed below. So it could get up into that gap again, but we're looking for it to stay kind of underneath this prior high, this topping tail looking candlestick here. So that's what we're looking for. Today, let's check the volume. I'm going to go ahead and pull up the ES, the futures, um, and see what the volume looks like today. I think it's pretty low. Let's see. Excuse all the lines on this chart. Yes. Yeah. I mean, this is actually the weekly. Let's look at the daily. So the volume today on the green day is lower than the last 2 days, which were red days. So we're still looking at the red or sell-offs being higher in volume than any of these green bars over the course of the past 2 weeks almost. Week and a half at least. All the green bars are lower volume. You can see that down here than the red bars. So we're still in that same pattern. So, it just means that perhaps on the green days there's just lighter volume. There's more heavy volume on selling, which could potentially indicate a change in momentum of this market. So, more to come there as the week develops and as earnings are released. So that's just the S&P 500. Let's take a look at the Nasdaq because this was a big one that we talked about last week. I actually did get out of my Nasdaq puts. I still have my call spreads, so let's just revisit what the positions were that I had on Thursday. So I had Apple call spreads. I had bought puts and call spreads in Apple on Thursday. I bought puts and call spreads, sold call spreads on QQQ on Thursday, Nvidia and Facebook also. So all 4 of those, I actually got out of the puts on Friday, and I'll show you where in each of those. And then I left the call spreads. So selling my call spreads, these stocks and ETFs have gotten nowhere near the call spread short strike price. I mean short call that I've the short call strike price. Sorry, which basically means I sold the call spreads up above the prior high. So my short call is above this prior all-time high. And then I have bought a call further out, to kind of mitigate the risk there. So it's still, I mean, as long as it doesn't make all-time highs again, I should be okay. So they're August dated short call spreads. So I think, within the next 3-4 weeks, depending on what happens with earnings, of course, and the geopolitical landscape, it should give stay. It should stay below this 269.79. I mean, it may not, but even if it gets up to 274, it should be okay. So that's the cues. Again, let me just go ahead and show you on Friday's chart. Let me make it a couple of days so you can see Thursday's chart as well. All right. So the arrows are where I got into the trade, and this arrow down here is where I got out of the trade. So Thursday at the rollover, I entered with puts, buying puts, at this first arrow and the second arrow. So I added more at the second arrow. And you can see we were talking about it was creeping up a little bit in the after hours, but it subsequently rolled over quite hard on Friday. And because I saw these kind of 2 bars here, let's move to the 5-minute chart. Because if you look at the 5-minute chart, it had a strong down move off the open, bottoming tail here, and none of these other bars ever got back down to this area, which is a bullish sign short term. So I actually sold out of my puts up here above this kind of consolidation range, or bear flag, I guess, out of the open. Because it got above this middle point right here, I did sell out of my puts. Still have my call spreads in the QQQs. Now it's still, we still have a lower high here. So whatever this high is that happens as a result of this week's or next week's move, it can get up to even this trend line as long as it stays below this lower high, which is at on the QQQ itself. It's at 268.41. We're still looking at potential rollover to the downside, but because of this move here, this kind of spike down and kind of bounce and never getting back down to that level, I bought it back. Also, and key here is the fact that it got below this prior support area of 252.78, spiked down, retraced, and recovered that area. So that again is a failed breakdown. So it got down below it, started to break down, and then just bounced like a rubber band and came right back up above it. And if you recall, I was saying on Thursday that I would be looking for a break of this level to get short, but shorter, I guess. But because it did, just kind of spike down and recover so quickly, that's actually a bullish sign in the short term. It did not stay down below that level. Like had it stayed down here and started to come, roll back down, I might have added to my position. Unfortunately, didn't do that. So we trade what we're given here. So we did get a pretty good profit on those puts, about $10. So not a bad trade, actually. Let's move next to Apple. Very similar situation here. Apple was really weak on Thursday because of news. It's going under some investigations, as well as delaying some of its product launches and 5G. So I bought puts in Apple. Let me see, where's the 5-day? On Thursday, not at the very top, but at the break of the 20 moving average, right here. You can see this green line is the 20 moving average. You can see the arrow there right underneath it, which is where I purchased it, right underneath this consolidation. Purchased my puts there. Not the very best location, but honestly, Apple's been so strong, I had to wait for some sort of a confirmation before getting into that trade. And my target on Apple, well, it was for it, of course, to stay below this 372.84 level, which it did. But also my first target here was this purple line, which is a complex trend line. Did the same thing as the market. And so the overall market, the Nasdaq, really kind of gives you an idea of how to trade the tech stocks in general. So the Nasdaq is bouncing and providing this spike down, bottoming tail looking pattern. All these other stocks in tech, especially the big tech, which really make up the Nasdaq, few 5, 6 stocks, I'm going to have to do the same thing. So I did sell my Amazon puts at the same time that I sold my QQQ puts and took profits there because of that move. And you can see same thing happened in Amazon. It recovered this purple trend line and closed above it. And today it's actually recovered the 20 moving average as well. So it was a good decision to sell that. I still, again, am short call spreads. So it's nowhere near where my short strike is on Apple either. So still keeping those. Next, and then we'll go over Nvidia quickly. Same exact thing in Facebook and in Nvidia. Still looking to get back short Facebook, I will say, because it is pretty weak. It has some bad news. It's going into a congressional hearing this week, I believe, along with some other tech stocks. So I'll be looking for potentially some bounce from here. It hit the 50. It spiked below 50 and recovered it. So it's kind of in the middle of this range, though. So I sold it up here, bought it up here rather with puts, and sold it those puts down on Friday as well. So we'll be looking for a lower high to be formed, and if a lower high can be formed and it rolls over at that high, I'll be looking to get short Facebook again. If it just breaks down from here, I may not get short. I might wait to see how it acts around this bottom of this range. You got to pick really good trade locations in some of these stocks because they are news driven. Nvidia, same thing, same action on Friday where it started down and turned green on the day and then just kept going up. So you can see here, I bought Nvidia puts up here at 414, held them Thursday night. I actually got out of them way up here at 4, still about $13, $12 profit on the options themselves. Same action, spiked down, held this support also. This 391.16, which is which was the middle of this range here that we wanted it to get below. It never broke that, just barely 391.08. So that was another reason to sell because it recovered and then didn't roll back over. It just kept shooting higher. And so around the same time, again, that I sold QQQ puts, I sold Nvidia as well. So those are kind of the main holdings that I had last week and this week, outside of course, gold and silver and commodities and short dollar. And we'll talk about that as we go into macro later on. Um, I did trade Intel as well, and we talked about Intel post earnings. So we'll go into um, what Intel ended up doing post earnings and how we traded it. Unfortunately, we did not get as great of a trade as we could have gotten had we just sold it in after hours, honestly. Here is the earnings in Intel. Bad, they really are having some operational issues. So, big drop, but then you can see it just bled out all night into the morning, all the way down to the 61.8 fib that we were talking about right here at 51.86. And this 61.8 fib is from this March low to the June high, and it retraced all the way to 50% of that move in the after hours, and then bled all its way down to 61.8%. So couldn't really trade right off the open. I guess you could have. You really could have traded right off the open if you were being really aggressive here. You could have traded immediately off the open, on the 1 minute chart, um, you know, this sell, this down move. I didn't, just because I thought it would probably, you know, recover and come back down because it had already gone so far down. My first target was the 61.8, and it already hit that target in the pre-market. So I waited for a bounce back up. It went a lot further than I thought it would. I'm going to remove this. But it did double tap at the 61.8 fib. And at that double tap, once this bar was formed, the next bar, I actually sold Intel and was able to get into it and have a pretty decent profit from the 51.70. What was it? 51.60, I think, all the way down here. I sold it. I rebought it back around 50.80. So, less than $1, but pretty good for an intraday post-earnings trade. Didn't get the best. I didn't hold it longer. I could have gotten a better price there, but I don't like trading so late in the day. This move off the open was really key, though, because it hit that target of 49.48, which was a longer-term, pivot from back here. So it hit that target pretty precisely right in the morning session. So that would have been good. 1 minute, using the 1 minute bar, selling underneath the 1 minute bar. And then you could have bought it like in this area up here as it started to recover. But, a similar trade off the bounce, off the double top right here on the 61.8. So that's Intel. And, you can see today it's also been weak off of the open. I think it opened a little higher, but just bled off all day, back down to this 49.48 level. So we'll see if this 49.48 level holds. I'm actually going to put an alert down here because if it doesn't hold, it has the potential to go all the way down, I think, to the 41s. And if it does, it could be a potential bounce play going forward into the future after a few days. Usually we wait 3-4 days after earnings if it's a huge gap down to see where the stock ends up. Now, what I was really wrong about was AMD. AMD rallied super hard in the aftermarket off of Intel's bad news, I guess. And my thoughts were, and I actually said I wasn't going to trade it long if it ended up going up the next day, which it did. So here's the after hours on AMD on Intel's bad earnings. It got all the way up to 65 almost. It did gap down a little bit in the morning and just went just spiked up so high. Um, Huge move the next day. You can see here on the right side as well. On Friday, just huge green bar. Today it actually made a really big topping tail, so I'm thinking about going to go ahead. I know it's got its earnings coming up, which will probably be good, but it's already made such a huge move. Are its earnings tomorrow? Yes. Its earnings are going to be tomorrow after hours. So maybe tomorrow during market hours, if it goes below this spike high, the bottom of this, which is about 67.92, I might trade it for an intraday short trade. But honestly, I don't know. I may not because AMD has been so strong. Um, this would have been an amazing day trade just going long AMD. And I did mention on the video, it definitely is a trade you could take, off of the open, off the 1 minute or 5 minute bar. 1 minute would have been ideal. Even 5 minute would have worked though, because it went up so it was very strong, from about 64 all the way to 70, about 10% move after the open on Friday. So that's one thing that I really didn't get right. I did not think that AMD would push so hard and make such a big move, but apparently Intel really had some bad news, and AMD, is set to benefit from it. So let's go. I guess we'll go into some of the earnings for this week as well. Some key earnings. I'll just list them. Just say them. Monday. Today we had like SAP and Hasbro. Those are not like very key earnings. Tomorrow starts some really key notable earnings coming out. 3M is coming out tomorrow, which is MMM. 3M is also, in addition to 3M, you have Pfizer, Visa, McDonald's. So Pfizer just came out. I think you guys know the news on Pfizer. I think there's a vaccine for COVID. So they have a candidate for COVID vaccine. McDonald's here. I anticipate some weakness, but I don't know. And they have had their dining rooms closed for a long time with COVID. But they do have the Grubhub or Uber Eats or something. They definitely work with that. And drive-through has always been strong for McDonald's anyway. And it actually has a relatively bullish chart pattern. So we'll see how McDonald's acts. I always have to wait till after earnings. I can't really predict too well. Visa and MasterCard also. Financial companies, I expect weakness. However, we'll have to see. And so Visa's reporting Tuesday, and MasterCard, I think, is reporting later in the week. So however Visa goes, I'm going to just use that to see what the action is going to be potentially in MasterCard. So that's Tuesday. Wednesday, I think it's Facebook, Boeing, GM, Thursday, and GE. Thursday is Alphabet, Amazon, and Apple. So Wednesday and Thursday are key days. Facebook, Apple, Alphabet, Amazon on those 2 days. So Wednesday and Thursday are going to be really key for earnings. So just keep an eye out for those days. Alphabet, I'll just show you quickly because we haven't talked about this in a while. And I did say something about potentially looking for a failure of this breakout here that it's done. If you take a look at the weekly chart, it broke out over here on the 6th, the week of the 6th, and it looked above that breakout and this trend line and failed that twice. And it is right here at that level right now. So let's see what earnings do for Google or for Alphabet. If it can't hold this, I anticipate it's going to be lower. If it can somehow break out above this range right here, it could go a lot higher. So more to come on Alphabet. I don't know how how the tech hearings are going to shape up for this stock, but that's one I'm going to watch pretty closely because it has a pretty good technical pattern. All right, so on to the macro view. Now, we know that the US dollar has been weak. I'm short the UUP, which is the ETF on the dollar. This is the Dixie. This is the actual US dollar index. So you can see here on the weekly chart, it broke down below this support and the prior low over here around 94.65, and it is continuing lower. So we have some other pivots on the US dollar to look at going forward, and I think this could potentially be one too, now that I'm looking at it. So we've got here 93 area, 91.80-ish, and then down here all the way 88.37. So I'm anticipating a potential bounce around this 93 area, and if not there, then definitely down here around 92. It is starting to bounce slightly today. You can see here it did have kind of a bottoming pattern and a bounce, so this could be also the bounce. So let's see how that goes. But the dollar is going to be remaining weak, in my opinion. Here's the daily on it. We've been short U.S. dollar with the UUP since this H pattern right here, this break of this big old H pattern. It held on. I think we sold some of it, some of our position. Yeah, I sold half of my position, whatever I had left. I sold half of it today. So I only have half my original position right now, because it has made such a huge move to the downside so quickly. But I mean, the way that the money is getting printed, we just got a new stimulus package with I think 70% wage replacement in unemployment insurance, and I think they're going to give out some more stimulus checks. So I don't see how this is going to get any better. They're just devaluing the dollar repeatedly with all of this. Not that it isn't needed. However, it is devaluing the dollar. And so that's where we are with the dollar. It's still short. Here's UUP if you want to see the actual ETF. You can see here, if you look at this long-term Fibonacci retracement from all the way down here in 2018 to this high of 2890. The 50% retracement was way up here. 61%, 61.8 is right where we are today, and you can see it's kind of bouncing and closed above that. So this is a very key moment as well. It is below the 200-week average, so that's really bearish, but we'll see how it acts here. You also have a longer-term trend line here, which could be moved actually now that let's see. Oops. It actually could be moved a little bit. I don't like the way that looks. I'm going to move it to this green line right there, to that spike low. It's going to be hard to get there. There we go. Yeah, so that's what we're looking at. This is going to be the next target to the downside if it does get there. If it doesn't hold the 61.8, otherwise we'll look for a bounce back to the 200-week at least. All right, so overall macro situation, dollars being devalued, gold, silver, commodities, and even cryptocurrencies are going up, and that's what we're long. Looking for a chance to get long Bitcoin, but it keeps just bouncing and not giving me a real opportunity to get in there. But it is really flying. We'll go ahead and show you Bitcoin while we're talking about it. So here is that chart on the weekly on the right. And you can see actually how it just broke out this week, which means today, over this 10,670, which is this prior high here. So looking for potential pullback to get longer. But you can see this kind of reverse head and shoulders pattern here, and it's really really bullish. Look at this bar today. It's up 14%. So that is Bitcoin. But alternatively, we could, we're still in some of the other precious metals here, like gold or some of the precious metals. Gold, this is the key spot for gold. Still on gold, partial, part of our gold position. We did come out of some of our position last week, but the target was either the 1917 area or the ascending trend line here. It is pushed above both today. So over the weekend and today, let's just look at it on the daily. So this bar here pushed above both. I definitely sold some a little early. Didn't think it was going to go this parabolic. But I think it was a good decision. And just from a risk management perspective, and you can see that it has pushed all the way up here to 1941.90 for the high, which is, I believe, an all-time high in gold. So if it can hold this trend line and stays above here, I mean, it could potentially go much higher. So I'm really going to be looking at this 1917.30, which is the prior high, and this trend line as an area of potential support now. Previous area of resistance, current area of potential support. So if it pulls back to either of those and bounces, I might get into it a little bit more. However, I'm still in it, still holding my position from all the way down here, part of my position from all the way down here at the 1760 area on that breakout. On to silver, which, again, just amazingly parabolic. This move here, this Fibonacci extension, you can see we're approaching it at the 25 level on the futures, which is our target, which was our second target. The first target was the 2120 area, and we talked about how there's really nothing to stop silver from 2120 to 25. I think we have to look at the monthly all-time chart to show you this. Yes. So you can see here we had a 2120, which is this prior high right here, where this new oval is that I'm drawing. Yep, 2120 first target, blew through that, no issue. Second target was the 25 area, which coincides with this spike here. And really just a bunch of chop consolidation, nothing really terribly meaningful to stop it in between 2120 and 25. So it's quickly approaching it. In fact, you can see on the left side, this is the after hours. It is pushing up higher into the after hours as well, closing in on 25. So I still have a small, like about a quarter position in silver, unfortunately, but it is what it is. I'm still holding it. I'm not planning on doing too much with it until I see a meaningful pullback in silver. Here is the Slv Etf, and you can see just how bullish it is. Just these huge gaps, and very strong volume. You can see down here the breakout, consolidation, breakout. Volume has been quite high. People are now starting to talk about it on all the financial media channels as well. It's getting very much a lot of airtime. So, it's going to be FOMO'd and people are going to just pile into it. Thankfully, we've been in it since 13 and got into it more at the breakout of 17 and then 1837. So, we are really in a good space, but any pullback in silver, I think, would be viable through next year, through early next year, at least. With the devaluation of the dollar, there's been a strong correlation there. You can see this is parabolic up, just like the Dixie or UUP has been just as parabolic to the downside, or like reverse parabolic. I don't know the proper term there, to the downside. So that's gold and silver. I will talk about commodities briefly. Okay, we're going to look at the two commodities that I'm holding right now. Let's start with wheat. Wheat, I'm still in, even though it's pretty volatile up here at the 200-day moving average. But we've had it since down here at the breakout of 510. Still in wheat. If it crosses below 526, we're getting out. That's our stop for the rest of wheat that we have. So we're going to hold wheat, the position that we have left, unless it crosses down below 526. So wheat's still doing well. I got into coffee using nib last Friday as well. And you can see here at the breakout of this prior high right here and this little gap, but mainly this prior high. I did buy some nib. It did come down on Friday again, but I mean, obviously I held it because I had purchased it Friday at the breakout. And it subsequently today has gone up about 3.3%. And it did break above the 50 moving average here as well. So I'll be looking for further, you know, prices on higher prices on nib, cocoa, not coffee. Apologies, cocoa, up to the 28 area. So this gap right here, um, looking for at least up to the 28 area, then potentially all the way back up, you know, to these highs. So just starting to kind of curl over. If you take a look at the weekly on this guy, this is a longer term from 2016 trend line, and it's kind of been holding this trend line somewhat mostly over the years and making higher lows. This was a lower high here on the crash, but you can see it has subsequently recovered and is above some key moving averages as well on the weekly. So that's NIB. And overall, the commodity space in general is going to be pretty bullish, I would think, over the course of the coming months as the dollar continues to struggle and commodities continue to rise in prices. Um, the two that I'm in right now are nib and wheat, but there are things like cows, which is actually also looking great. You know, soybeans. Let's show you soybeans, which is, you know, also looking like it's coming off of a low with high volume. I mean, check the volume out on these. Additionally, corn I think corn has struggled a little bit since its potential breakout, which is why I'm not in it. But it also has the potential, if it holds this 1150 area, to come back up and make new highs. And if you take a look at these commodities as a whole, right? I'm getting the, let me just look at my recents under the D. I think it's DBN. Maybe I'm totally wrong here, but there's a broader commodity index that you can see that is actually quite perfect on the way that it has accelerated from the lows with high volume. But you can really see it in any of these other commodities as well. How it's, you know, utilizing, how it's sticking to its prior lows and kind of either bouncing off of it, making, you know, double bottoms, moving towards kind of the higher end of the range. So these breakouts are going to be pretty key. Like wheat, for example, needs to break out above the 610 area, etc. So commodity prices, we're looking for higher prices. Groceries are still expensive. Fruit has been expensive and is increasing in price. Grains, definitely. So, I mean, you see the higher prices in the stores. So I don't see how these commodities can go lower. I mean, they're just going to be going higher, especially with the devaluation of the dollar. So that's pretty much all I had for today. I will starting tomorrow, we'll have a lot of earnings every single day. So we'll be going over lots of earnings plays the rest of this week. And I'll try to put a video on every week, which will just be focused on earnings, because you kind of have the macro view and what I'm looking at. So we'll be short and sweet on the earnings for Tuesday, Wednesday, and Thursday of this week. And then again over the weekend, we'll revisit, do a recap, and have a longer video on macro and the broader trends in the market. All right, so you guys have a great night. Happy trading, and I look forward to coming to you tomorrow with another video. All right, take care.